evening. Maybe you're having lunch. Wherever you are in the world, I hope you're doing really, really well and that you're having as much fun as I am watching these crypto charts go up and to the right. Let's get our start here, taking a look at the old coin, Bitcoin, one of our favorites here on the channel. Go ahead and take a look here. 36.8% to the upside since back here in September 28th. That's going to be an important date here later in the show when I kind of compare what price action has looked like for Bitcoin relative to the NASDAQ and relative to the Microsoft from those dates. But I am T. Shroom, in for the Investing Bros. If you're joining us for the first time, consider subscribing, and we're really, really glad that you're here tuning in live. We also go live at 3 p.m. Eastern Standard Time on Mondays, Wednesdays, and Fridays. Well, guys, we're going to be hearing from Gary Gensler. We're going to be hearing some updates on the spot ETF situation, which is more than likely why we're seeing some upside this morning for Bitcoin. And we're also going to be looking at a couple other things as well. Some legislators have some things to say about Gary Gensler. We're gonna take a listen to those as well. But we're gonna take it all in. I'm gonna give my take, and then we're gonna try to pursue calm, because these markets, they're turbulent, right? There's ups, there's downs, and we want to make sure that we are moving forward in the best way possible. And the best way is with a calm mind that's able to make cool, rational decisions with every passing moment, regardless of how much our bags are pumping or dumping. Guys, let's go ahead and get into the stories here. Going to start with the big one. This is from NASDAQ.com, quoting Benzinga. Spot Bitcoin ETF imminent. SEC approval window is due to open, or will it just get punted? So this is legit. This is speculative at this point. The actual content is speculative. It's not saying that there's going to be a spot ETF passed today, right? But it's possible. It is more possible than yesterday. Yesterday was a different situation legally for the SEC than today. The window for approval of all pending spot Bitcoin ETFs opens tomorrow. That's today. This article was written yesterday, and will last for at least 8 days. That's according to commentary from Bloomberg's ETF analyst James Seifert and BI senior ETF analyst Eric Buchanan. These are both the names that have been pretty much breaking the news for these spot Bitcoin ETF announcements. Let's go to their tweet now and see exactly what's being said. So Bitcoin ETF approval window opens tomorrow, today, again, for 12 ETF applications, including Grayscale and BlackRock. So the Grayscale, BlackRock, that's an obvious one. The Grayscale, that's the news that's also pretty exciting. If you have exposure to GBTC, if you've bought GBTC, this is actually pretty exciting. We'll take a look at those charts in just a few minutes. And the crucial buckle up from Luke Martin, venture coinist. Okay, but here's the Bloomberg screenshot of the news that came through the wire. It would have been yesterday, so the 8th of November, excuse me. This says everything that we've been talking about here, but potential ETF approval window opens for BlackRock and peers. A brief window opens November 9th, that's today, for the SEC to potentially approve all 12 U.S. spot Bitcoin ETF applications, okay, including Grayscale's GBTC. It will be open for at least 8 days, even if approvals don't arrive this month. We still believe there's a 90% chance of approval by January 10th. Yes, and January 10th is the last approval day for, I believe it's Cathie Wood, ARK 21 shares, spot Bitcoin ETF. Some of these ETF names have just a mouthful, so you really got to be careful. So this has sent Bitcoin's price markedly higher. I showed you the daily chart here, but let me compare it to Microsoft and the NASDAQ. But before I do that, I want to pop in on the chat and see who's crack-a-lacking, who's coming on in, dropping the GM. Well, first, it looks like, according to mine, which is probably wrong, it is GS. GS coming in the chat strong, saying GM. And then we also had Gary C saying GM, Gia. So you got to love it. Has anyone else or DI or D rocketing? So asking about a altcoin here. I was playing around with it yesterday, but got stopped out every night. Of course, it took off. So Gary C trying to time that ordi buy over there. It's really going to be tough to try to buy crypto probably for the rest of the day. The unfortunate truth is you probably should have bought a couple weeks ago. If you're trying to get into crypto now, you're going to have a little bit of a challenge because of a little thing called slippage. As prices are moving quickly up and to the right, it's a little harder to get those buy orders in because nobody's selling, right? Everybody's thinking the same thing you are right now. I should have bought more. And then those who have not been in trading and investing are actually going to try to enter a long position, and some of them will get filled, but a lot of them won't. All right, anyway, Gary C. also said, before I forget to say it, Happy Veterans Day to all the vets. I'll be enjoying the day out fishing to enjoy my Veterans Day. Excellent there, Gary C. Love to see it. Trippy said, let's go. Let's go. Yes, absolutely. Absolutely. It is a day to get excited. We are seeing prices go up and to the right. Get excited, but not get emotionally overinvested. That's very important. Gia said, my day off tomorrow will be spent at DRS. I don't know what DRS is. Department of Registered Safety, maybe? You're going to be registering some. I have no idea. No idea what that is. Maybe you could enlighten us, Gia. DRS. Maybe that's something I should know. Okay. Eric Wallen said good morning. Meek Vision said 37K. 37K indeed. It's what I'm looking at. Spot price right now for BTC, 37,203. Very exciting. Crypto Mini Bike said a great day. Yeah, that's right. It is a great day. And Juice Toes, whose name is repulsive but funny, said I'm getting excited again. Yes, I think everybody's getting excited, and we're going to be if you stick with me, we're going to be doing some emotional management here in this episode, so that you to ultimately pump your bags even more, right? There's actually emotional mistakes that you can make right now. They're going to make you less profitable as an investor and a trader, but don't worry, I'm going to help us kind of sort through those emotions. Unfortunately, people been waiting for deeper pullbacks to buy. They're getting left behind. That would seem to be the case here. Ryan Nachos. And then Eric Wallen said, won't dip as much. Yeah, so we're seeing it. We're seeing it. And GS has clarified DRS is doctors. So that makes sense. That is 110% making sense. All right, guys, let's take a look here at Microsoft. Microsoft, since September 28th, is actually up 16.92%. So you might say, well, the rest of the market is booming. Maybe this is just a cyclical, move to the upside for risk assets. After all, the Fed did come out and say, some pretty dovish rhetoric just a few weeks ago. And we're also seeing the labor market soften, which would lead all indicators to, less high or no more hiking. Let's put it that way. Still going to be higher for longer, but less hiking. And here's why I disagree with that assumption. I don't think that this is, I don't think that this is a broad-based risk asset pump. Okay, and this is why. Because if you look at the Nasdaq proper since September 28th back here is only up 5%. Okay, and then peak to trough here back, if you go from this extreme of October 26th to where we are today on the Nasdaq, it's up 8.4%, which pales in comparison to Bitcoin's movement from the 28th, okay, 36.8%. It's not comparable. Okay, so Bitcoin, in my mind, has decoupled. There is not fully, but in terms of the monthly price action, it's decoupled. In terms of the greater Fed narrative, I would say Bitcoin is yet to really show me that it's fully decoupled. But clearly, there are forces here at work that are inspiring, that are motivating the buy side for Bitcoin much more than in equities. Okay, so that is something that I'm watching, something that we're monitoring here at the Investing Bros, which, by the way, if you're getting any kind of value out of this video so far, please go ahead and consider subscribing, and don't consider liking. Like the video no matter what. Regardless of whether or not you are getting any value, like the video. If you are hearing the sound of my voice, run out of the kitchen where you're prepping a sandwich before you head out to work, run back to your computer, smash the like button, and then run back and finish making your sandwich. That is the order of operations here. All right, let's go ahead and take a look here at the grander narrative. So we have the Nasdaq moving up and to the right, but only by about 6%. since September 28th. We have Microsoft itself seeing some pretty good gains, up 16.9% since September 28th. And we have Bitcoin since September 28th doing 36.8%. So obviously there's something going on here. On the Bitcoin side, that's really, really bullish. Microsoft does have the AI story kind of boosting its price up and to the right. However, clearly Bitcoin is getting much more love from investors through October and heading now into the depths of November, right? So that is kind of what we can conclude here. But does that mean that Bitcoin is ready to pull away fully? Well, here's what I would say is you have to go back to the 4-year cycle, which I've got here pulled up for you guys. This is the stock to flow model, and these are the proximity points that are important, okay? These hashed lines here, no pun intended, are the halving events for Bitcoin, okay? And you can see again and again kind of how price action behaves in the run up to the halving. Now, guys, we have had, if you look right here, we have had a lot of just sideways movement, and it's reflected on the price chart, and it's reflected here on the stock to flow model. Okay, we've had a lot of sideways movement, a lot of boring movement. Now we're getting into some excitement. You know, we're seeing it in the chat, we're seeing it on Twitter, we're seeing it even on CNBC. You know, we're having Bitcoin fully orange-pilled Bitcoin fanatics going on CNBC and saying some pretty bullish things. I'm seeing it, you're seeing it. The rest of the market is seeing it as well, okay? But that still does not mean that we're ready for takeoff, in my opinion, and according to the stock to flow model. We still have more time, okay? We still have more time. The halving is not, according to the stock to flow model, the halving is not going to come in until quite a bit further into the future, April 7th, and that's a date that we all should know already, but it's going to be kind of late spring, mid to late spring there in 2024 is when the halving will come out. And it's priced, the price model is predicting that it's going to be at $53,000 per coin, right? So that is really what we want to be focused on right now, because we're seeing bullish predictions to the upside that are getting a little bit outrageous. People thinking it's going to go all the way up past 50,000, all the way up to 100,000 anytime soon. I'm here to tell you that is not calm, balanced thinking. That is extremely optimistic. That is extremely bullish. It is possible, but it is unlikely that if you trade with that bias in mind, that you're going to be profitable. Okay. Now, if you buy and hold with that in mind, it kind of doesn't matter unless you've invested more than you can afford to lose, in which case you will also be screwed. Okay, because of the simple truth that there are pullbacks. Okay, look here back in the lead up to 2020's halving. As you can see, we are not yet in the purple zone. Okay, once we enter into that purple zone, that's when, you know, kind of all bets are off. This baby is ready for launch. Go ahead and dump all of your liquidity that you are comfortable, that you can afford to lose, and let's watch this baby pump, right? But we are not there yet. We are not in the deep purple. We are still in the blue. And in the blue, there is still subject to moves and corrections to the downside. Okay, as we saw here, as we saw back here, as we certainly saw back here. Now this is going back to 2012, so this is a pretty good movement back. But all I'm trying to say, guys, especially if you are newer to the crypto space, is there is still time before Bitcoin becomes set it and forget it with big percentages of your net worth. Right now, if you have a big percentage of your net worth in Bitcoin, just realize that could still correct 20, maybe even 30% before we start getting to the point of no return and we just move to the upside and we make our way up to 100,000. Okay. Now, another thing that the stock to flow model shows that a lot of people aren't talking about is the upside potential for Bitcoin. Okay. So far, every new high, right, that the stock to flow model, which is this brown line, okay, has been achieved and has been exceeded in every cycle. Okay, so that's something to keep in mind. And this is going to be very bullish for you guys, but just bear with me. What I'm trying to do is help you to take seriously the 4-year cycle for Bitcoin. Okay, so back here after the 2013 halving, okay, the price got up. It was predicted by the model to get up to $166. There was people probably doubting it would ever get that high, right, at that time. It did it, and it exceeded it, getting up to $1,000 in that time period. Okay, then the stock to flow model predicted 4,000. Okay, and then Bitcoin exceeded it, getting up to 19,000. And then back in 2022, the stock to flow model predicted 50,000. Okay, and then it exceeded it, famously getting up to $69,000. Did the Bitcoin spot price. Okay, now this next cycle, the stock to flow model is predicting a $451,000 Bitcoin. Okay. Will we exceed it? According to the stock to flow model, we will. Now, I'm not going to say that I think that we're going to get that high. I'm just showing you guys what the stock to flow model shows. The amount of liquidity that would be needed to rotate into Bitcoin would necessitate quite a bit of downside for equities, for real estate, for the bond market, for precious metals. There would need to be quite a haircut in other markets for that liquidity to loosen up and to make its way into Bitcoin. Okay, so I'm not saying it's going to 400,000, right? But this is a truth that other people are not a truth. This is an indicator from the stock flow model that a lot of people are not paying attention to, in the same way, okay? In the same way that people are not paying attention to that we are not in the purple zone yet. We have not passed the point of no return into the bear market. GS, telling the truth here, guys. Please hit the like button. We're doing it for the noobs today. As you can tell, we're trying to, but this is probably something you need to realize as well. Something maybe you need to remember. And King D is saying it best here. Everyone, FOMO in now, LOL. This is the exact opposite of the sentiment, which I believe King D here is expressing in irony, in jest, I would hope. Because it's running counter to the overall thought that I'm trying to convey to you, especially if you are new to crypto, which is hold what you got, okay, but do not bet the farm today, because more than likely Bitcoin is going to see a retracement down. Now, I believe it was Eric Wallen who said, folks who've been waiting on the sidelines, waiting for a pullback in Bitcoin, have not been rewarded. If you take a look here, it is true. If you've been in Bitcoin since this last new huge media pop, right, which has got all the uncles coming out of the woodwork to go talk to their crypto nephews and say, hey, what's going on here with this Bitcoin deal, right? They're coming out of the woodwork and they're thinking about Bitcoin, and some of them are deploying some actual capital. Ever since then, there's not really been significant pullbacks. Okay, there's been a couple of red candles here, but for the most part, it has been up and to the right as institutions are trying to position themselves for exposure to Bitcoin. Okay, now hopefully you've already been buying. If you're listening to the sound of my voice, you've had a long time since Bitcoin's price has been sideways. This is even you've had since about June of 2022 to continue to DCA and pack your bags full of Bitcoin. Okay, but if you're just getting in now, there is still hope. The hope is that every single time there is a pullback, right? Especially when we're this far from the halving. Okay. Now, some of you might be hearing that and be a noob, and you've bought in more than you should have bought in, right? And you're saying, wait, there could be a 20 or 30% correction? Yes, that is what I'm trying to say. There could still be a significant correction in Bitcoin and in crypto and in the NASDAQ. Right? The NASDAQ could also pull back, maybe not 20, 30%, right? It's a lot less volatile than Bitcoin. But there can still be corrections before we pass the point of no return for Bitcoin. That now, the point of no return does not apply to the stock market. Okay. So overall, there can be a correction. You do not want to have all of your net worth in Bitcoin, period, right? But right now is certainly more risky than it's going to be here in a few months. Guys, if this is something that is resonating with you, A, hit the like button, but B, go talk about this on Twitter, go talk about it on, at the proverbial water cooler at your work. Most people probably don't physically go to work, but tell people about this, okay? If you've oranged people, or if you've orange pilled people in the last few weeks, that's great. But make sure that people are not risking more than they can afford to lose. And then you create a jaded, opposite of orange-pilled person who looks at Bitcoin, thinks about Bitcoin, and thinks, oh, that sucks. Bitcoin sucks. I lost all my money in that, right? Because they sold at a 30% loss. Okay. Hopefully I have covered this topic well enough. Let's move on because there is some more news. But overall here, guys, there is big bullish news, which is that the spot Bitcoin ETF could potentially be passed today. That is a possibility. We will be obviously monitoring this quite closely because of the potential upside that Bitcoin can have. Binance launches self-custody crypto wallet with exclusive airdrop zone for users. So very, very interesting there. A move from Binance. Not going to get into the details there, but a pretty big update. Let me know in the comments and let me know in the chat. Do you think it's over for Binance? Do you guys think that Binance has a chance at having real market share here in the United States? Or are they going to be pretty much resigned to service other countries other than the United States? I always think Binance will probably be around unless there's some kind of global fraud that they've been running, but it doesn't appear to me that that's the case. It seems to me that there's a somewhat upstanding company, that has got into crypto early, right? So there are some things you can say about them, right? But ultimately they're upstanding, but they have not been able to comply with the United States standards. And that's why, if you look here, they are in the Cayman Islands, right? They're not located in California. They're not headquartered in New York or, Delaware. They are headquartered outside of the U.S. Let me know in the comments, do you think that that's where they will remain, or will they be able to service an American client, an American customer at some point in the future? Let me know. Let's go ahead and take a look at this next story here. SEC Chair Gensler says reboot FTX run by ex-NYSE chief is possible if done within the law. So I don't know the full context of this, but this is just insanity, right? This is insanity, and it's also even more insane because it sent the FTT token up 84% following Gensler's FTX revival comments. Okay, I don't know if he meant to do this, but it's like it is just baffling. It's just baffling. This is on CNBC, right? .com. Build the trust of the investors in what you are doing and ensure what you're doing the proper disclosures, Gensler told CNBC at DC Fintech Week. Okay, so that's the context. He was talking at DC Fintech Week. I believe this is also where Gary Gensler, and we reported on this earlier this week, and this Ripple CEO BradGarlinghouse were theorized. People were thinking that they may go head to head in a debate. I don't know that that's going to happen. But anyway, there's more details to this story, guys. But ultimately, it's just ridiculous. Gary, like that's what he spends his time talking about. Now, maybe somebody asked him a specific question about this. And look, guys, theoretically, I guess it is possible because all FTX really is at the end of the day is just a piece of paper, But it's also a brand, and for Gary Gensler to suggest that brand is anything but fully tainted is just terrible. I don't know what else to say about it. Theoretically, yeah, he's right. Legally, it wasn't the brand that defrauded FTX's clients. It was the operator SBF, right, and his cohorts. However, why would you ever want to do this? Why would you ever want to reboot FTX? I don't know. I don't get it. That is very strange. And someone else who doesn't really think too fondly of Gary Gensler, just as we wrap up, there's been a statement put out in Congress by Tom Emmer, the man who should have been the freaking Speaker of the House, but lost out. He's got something to say to Gary Gensler. Let's hear what it is.
Thank you, Mr. Speaker. Regulation by enforcement is a practice all too common with this administration. This is particularly the case at the SEC and Chair Gary Gensler's approach towards our capital markets and financial services industry, but especially with our emerging digital assets community. My amendment seeks to put an end to Chair Gensler's pattern of regulatory abuse, a pattern that is crushing American innovation in capital formation without undermining our ability to go after criminals and fraudsters. Specifically, my amendment prohibits the SEC from using funds for enforcement activities related to digital asset transactions until Congress passes legislation that gives the SEC jurisdiction over this asset class. This will keep Chair Gensler, who has proven himself to be ineffective and incompetent, in check while Congress continues working to give this industry a chance to grow and develop right here in the United States. Let's just look at the facts. Under Gensler's leadership, the SEC has pursued dozens of enforcement actions against the digital asset industry, despite never finalizing a single rule or regulation for the industry to follow. Chair Gensler refuses to provide the marketplace with clear criteria for digital assets that he would consider to be a security. How can this industry comply if there are no rules or guidelines to follow? On top of that, Chair Gensler has developed a track record of going after actors like Coinbase, a publicly traded company desperately trying to survive and innovate right here in the United States instead of going offshore like so many are forced to do. And Gensler has done this while missing bad actors like FTX and Terra Luna. At a time when clear guidance is desperately needed, Chair Gensler instead spends taxpayer resources praising himself for targeting celebrities like Kim Kardashian, while Sam Bankman-Fried was running a Ponzi scheme right under his nose. What's worse is the SEC doesn't even have jurisdiction from Congress over this asset class to begin with. Yet, the SEC has no shame in trying to expand their jurisdiction to swallow and destroy the digital assets industry through regulation by enforcement. Last year, the SEC's Director of Enforcement admitted during a House Financial Services Committee hearing that the SEC pursues enforcement actions on entities that are actually outside of its jurisdiction. One of these extra-jurisdictional enforcement cases was the SEC's landmark crypto enforcement case against Ripple, alleging that XRP is a security. In July, the Southern District of New York sided against the SEC, asserting that XRP is not itself a security. In August, the United States Court of Appeals for the District of Columbia Circuit found the SEC to be acting arbitrarily and capriciously in its refusal to approve Grayscale's Bitcoin spot ETF application. And just last month, the Government Accountability Office found the SEC to have created an illegal crypto accounting rule that is actually out of compliance with the Administrative Procedure Act and the Congressional Review Act. The unique characteristics of digital assets make it hard to fit this asset class into any existing regulatory framework. That doesn't mean crypto is up for grabs by whatever federal bureaucratic agency has the most taxpayer-funded enforcement resources to burn. Congress is working on legislation to establish a framework for how we classify specific digital assets as a security or a commodity, which will dictate the regulator of jurisdiction. Importantly, while Congress works to pass this necessary legislation, my amendment will not prevent future bad actors like FTX from being pursued and punished to the fullest extent of the law. The Department of Justice, the Treasury, and the Office of Foreign Asset Control all have the existing and sufficient authority to prosecute criminal acts of fraud, abuse, tax, or sanctions evasion. Some would even argue that these entities have done a better job of attacking fraud and criminal activity in this space than Gary Gensler and the SEC. This amendment is designed to send an important signal, not just to the SEC, but to every regulatory entity in the federal government. Congress will hold unelected bureaucrats accountable. SEC Chair Gensler cannot continue to abuse the powers of his agency to fulfill a political agenda of driving the new and promising digital asset industry offshore. Congress must be allowed to finish its legislative work so the future of digital asset innovation is determined by Americans, not by unelected bureaucrats in D.C. And with that, Mr. Speaker, I reserve.
So, obviously, big fan of these comments here. And the real meat and potatoes there is that this amendment is actually going to cut funding from the SEC for any action that involves extra jurisdictional action on digital assets. Okay, so basically cutting off the SEC's ability to take action in digital assets. Now, whether or not this gets passed, obviously, is another discussion. But the fact that there's somebody out there fighting the good fight, Tom Emmer, and he's not alone, right? He's obviously wouldn't be bringing this forward if he didn't have some support. Whether or not it gets passed, again, another issue. But it's good to see that this type of rhetoric, this type of position is resonating in Washington, D.C., because this is the right one, and hopefully this is the one that will prevail overall. But it kind of signals how early we are still here in crypto, that this is still the issue that we're dealing with. In terms of long-term, regulation here in the United States, my guess is that they're going to easily be able to just take their cues from the MiCA bills and the MiCA law over in Europe and the UK, have really kind of paved the road forward for kind of what the Western concept for regulation would be. But guys, with that, I've been T Shroom in for the Investing Bros. Thank you guys so much for watching and listening, and I'll catch you next time.
Trying to make paper, turn that batter to cake. Money like Lego, connect the dots stack bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shout it out loud on the PA. T-Shrooms News got the word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that batter to cake. Money like Lego, connect the dots stack bank. We are investing bros. We are investing bros.